Brazil is a vibrant emerging market, but it also has the economic and political backbone to support a thriving private equity climate. Now, INSEAD professor Claudia Zeisberger and 3 MBA students in the INSEAD private equity elective have done some research on the growth and success of Brazil's private equity market. And she joins us now. Claudia, welcome to INSEAD Knowledge.
Thank you, Shelley.
All right, the World Bank puts the Brazil business climate for doing business there, somewhere in like the bottom 10, bottom 20. It's way at the bottom of a list of about 150 or so countries. How come it's so successful in private equity?
Well, Brazil has come quite of age in the last few years with regards to private equity investment, partly driven from the investor side that started to feel more comfortable with the investment environment in Brazil, but of course also partly driven due to by the global macroeconomic environment. Brazil has been one of the most fantastic growth stories since 2008. It was hardly affected by the global financial crisis, so it really managed to attract the attention of global investors.
Now, just to do a very quick historical synopsis, in the 1990s, I guess beginning of the 1990s, financial market regulation, financial controls were relaxed and there was a little more transparency. Could you give us a little bit of a history going from maybe 1990 up to where we are today?
Yeah, from 1990 onwards, the Brazilian government really implemented quite a few improvements with regards to taxation, with regards to opening of doors to foreign investments. It managed to encourage also local private equity firms to take the lead and invest in up-and-coming industries. That driven together with the increasing demand for raw materials, the finding of oil offshore in Brazil, all basically turned around and attracted the attention of private equity firms out there. We have an interesting scenario nowadays that in Brazil, more than 50% of the private equity activity is actually driven by local private equity firms, contrary to other countries where very often the established Western private equity firms are the ones that are driving the initiatives.
What kind of risk portrait does Brazil present?
Yeah, I mean, we did a survey of GPs and LPs, and we filtered quite rigorously depending on their activity in Brazil. So we've had some of them that have been active in Brazil for quite some time, and some of them that are planning to move into Brazil. So the risk premium that the LPs, the investors in private equity, are setting for Brazil is pretty much in line with, at least with the other BRIC countries, if you like. So it's about 5% above the risk premium expected in developed private equity markets in the US and in Europe, which is reasonable. So to give you an idea, that means in terms of target returns, investors would expect a target return of around 25% IRR, which is pretty much in line with what we see for China and actually quite a bit lower compared to Russia.
Yes, and probably the value creation is a little better in Brazil, or am I wrong there? What are some of the drivers of value creation?
The drivers of value creation really is revenue increase. And I think that is in line, again, with what we talked about with the macroeconomic environment. The growth that Brazil has seen on the macroeconomic side, supported by a growing, very strongly growing middle class that has started to spend and started to take advantage of increased access to debt, to leverage as well. That has really driven the development in Brazil. And clearly, private equity firms see the opportunity to help the local firms by bringing their expertise in to take advantage of the increased demand in future.
What did some of the companies with whom you did these interviews tell you about their feelings about being there, their reasons for being there, some of the shortcomings, some of the benefits?
So, I mean, the reason for being there, I think it's just opportunistic. As I said, after 2008, private equity firms as well as investors were looking for opportunities that had not been riddled by the financial crisis, and Brazil still clearly stood out as one of those. But on the other hand, there is clearly still a lot of need for better corporate governance, better processes, assistance or help with operational procedures, links to partner firms outside Brazil, links to opening trade channels, opening sales channels. So there are lots of opportunities there that go beyond the growth opportunities in Brazil itself. And I think that's where private equity really can add value. So it's the revenue growth, but it's also the growth in terms of in terms of outreach and international growth of the Brazilian firms.
How do you see the outlook for private equity? I mean, as the business environment improves, will that take business away from private equity, or will it become greater than private equity? Because I get the sense that it's really easy to do business in traditional ways. It's not very interesting to private equity because the return isn't going to be that interesting.
Yeah. Yeah, that's not an easy question to answer. I think for the larger firms, there will always be an opportunity to raise funding a different way, independent of private equity. Nevertheless, Brazil is a very, very difficult market when it comes to fundraising, when it comes to accessing credit in a banking system. So especially the medium-sized companies have issues with raising funding in such a way. So that's where private equity comes in. That's where private equity can say, we will add value, we will add value beyond just providing the funding that is needed right now. Now, obviously, that also means, as in many emerging markets, that those private equity firms have to accept that they will take minority stakes. A lot of firms in Brazil are family-owned. Family-owned businesses are very reluctant to hand over majority stakes in companies. So that might require a little bit of an adjustment or an adaptation of how to do business. But I think that's no exception to any of the other emerging markets globally.